So what is currently happening to Workhouse Group stock is just insane. After getting shorted down by Wall Street, it performed an incredible run of more than 7,800% from lows at the beginning of 2019 to its highs in February after retail traders bid the asset up. But it didn't take long for the stock to recover from those astonishing prices to now trade at around $13 a share. So what we are going to do today is give you an insight into what is actually happening to Workhouse Group stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So Workhorse describes itself as the future of delivery. It uses delivery vans that are 100% electric, with a purpose-built design allowing for maximum cargo space and easy access for the driver. As far as functionality goes, Workhorse's product line appears to be very attractive. Adding smart systems allows the company to know where their vans are at all times, and maximizing routes carries a lot of value for Workhorse's clientele. But, and this is crucial for our prediction at the end of the video, the question of why the stock recently headed down, when all of this sounds so great, of course raises. And that's what we want to take a look at now. So since highs in January, Workhouse Group stock has been on quite the downward trajectory. Bearishness among investors in the EV space is one factor, but it's important to consider that that's plagued this sector broadly of late. However, Workhorse also lost out on a major postal contract to Oshkosh Defense in late February. This has been a key catalyst for the recent drop in the stock. Indeed, as a company that's still getting production figured out, orders are what matters right now. Accordingly, investors seem to be shying away from the stock on a lack of order flow of late. And in regard to the current valuation, Workhorse is still a tiny player among some pretty large giants in the EV space. This could provide the right kind of setup for long-term growth investors looking for value in this space right now. Taking a look at forward revenue estimates of $282 million in revenue for 2022, the stock trades at about 5 times sales. That's not incredibly expensive for a growth play in the EV sector with an e-commerce catalyst overlay either. Additionally, Workhorse reported a cash position of $215 million during its recent earnings release. There's some indication this cash should provide the short-term growth capital sufficient for the company's needs in the short term. Having a war chest is a good thing, and Workhorse doesn't look like it will need to raise capital in the near term. The company's recently reported earnings do show some revenue on the books, though not much. The company reported $1.4 million in revenue for 2020, though revenue is expected to ramp up significantly in the quarters to come. Workhorse is still in ramp-up mode, and investors buying this stock aren't doing so on the basis of backward-looking results. That said, the fact this company is generating revenue is positive. As order flow increases alongside production, investors are hoping to ride this wave higher into 2022 and beyond. Given this excitement and very likely future hype from retail traders, buying the stock could work out really well in the long term. This also explains the current start of attempting to get back to old highs, being up more than 50% from the pullbacks from those. So to sum it all up, Workhorse focuses on providing the last mile of delivery in a way that's as environmentally friendly as possible. Given the surge in e-commerce and long-term growth prospects of this sector, investors are looking for ways to leverage the logistics and distribution surge that will follow. Doing so via an EV option seems like a good idea. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.